Good morning, everyone. Welcome to this webinar by Fortuna Advisory Group. The topic for today is Demystifying the Homeowners Grant and the Home Builders Grant. My name is Dinesh Aggarwal. I'm the Managing Director of Fortuna Advisory Group. And we have two panelists here with us today, Eric Maroni, who's a consultant for Fortuna Smart Finance, and Stephen Gethin, who is the Director of Fortuna Legal. So we welcome you all this morning. We're going to just allow a couple of more minutes for more attendees to join. We can see the attendees logging in. So we'll just kick off in a couple of minutes just as more attendees join in. So hope everyone has had a good morning so far, and everyone finished with a good financial year and excited about the new financial year in their businesses and in their personal life. At Fortuna, we are always making continuous efforts to bring relevant information to our clients and to our guests and attendees who visit and attend our webinars on a regular basis. I can see a lot of attendees joining in. So just another minute or so, and I'll start introducing our panelists. Okay, so while more attendees are logging in, I'll just introduce our panelists for today, just with a little bit of the background. So we have Eric Maroni, who's the head of Smart Finance Mortgage Broking of Fortuna Advisory Group. Eric has 30 years of work experience in the corporate roles within banking and financial services sector, which allows him to provide tailored financial solutions based on the understanding the client needs now and into the future. His corporate experience includes working as WA State Manager for Commercial Broking at the Commonwealth Bank, and more recently at Bankwest as the Regional Sales Manager for Commercial Acquisition. With his experience, he determines the best banking options available for clients within the ever-changing financial services market. Thanks, Eric, for joining us. Then we have Stephen Gethin, Director of Fortuna Legal, who is a lawyer and a registered migration agent. Stephen is an experienced lawyer who specializes in corporate law, resources, and tax. He has spent over 20 years working in a major national firm and as general counsel and company secretary in international ASX-listed companies. His mix of in-house and big firm experience gives him sharp business focus combined with technical excellence and rapid response times. He excels in communicating complex legal ideas to stakeholders in plain language. He has acted on a wide range of major corporate transactions, including hostile and friendly takeovers, debt and equity finance raisings, and major asset sales and acquisitions. From various international roles, he's adept at managing legal and tax issues across multiple jurisdictions. Thanks, Steve, for joining us today. Just a couple of housekeeping. We will take questions at the end, but please feel free to put your questions in the chat box, and we'll keep an eye throughout the presentation. If there is really something relevant, which the panelists can take over during their presentation, we'll do that, but we'll try to keep the questions at the end. If you need to take a toilet break, you can find your own toilet in your office. Okay, so with this, I hand over to our first panelist, Eric Maroni. Eric, over to you.
Great, thanks Dinesh, and welcome everyone. I really appreciate you spending your time on this webinar, Demystifying the Homeowners Grants and Home Builders Grants. In this presentation, we're going to go through some of the eligibility criteria, some of the details about each of the grants, the requirements, etc. And then at the end, I'll talk a little bit about the financing, some of the nuances in regards to that. There's a lot going on in this market at the moment, as you're aware that both the state and the federal governments have provided these additional grants to stimulate the construction industry, both nationally and state as well. So look, as I go through, we'll try and demystify what it's all about. The usual disclaimer, I'll let you read that there for a minute or so. Basically, it's not a recommendation, we're just providing information, and as yourself as investors or borrowers, you seek your own personal advice if you need to in regards to borrowings and lending going forward. So first of all, the first homeowners grant. Now these slides do look a little bit busy, but I'm not going to go read out word for word, but just give you a brief overview. So the first homeowners grant, it's a $10,000 grant. So the scheme provides a one-off payment for eligible applicants. It applies to new dwellings off the plan or contracted builds. So it's not to buy a vacant land, although in saying that we will cover that off a little bit later on. There's no income or assets test to qualify. And as I mentioned, it does not apply to established homes, vacant land, holiday homes. It's purely there for construction or buying a new dwelling. The eligible applicants. So one of the key criteria here is you must occupy the home as your principal place of residence for, as it mentions there, the continuous period of 6 months. And that is commencing 12 months from completion of the eligible transaction or the purchase of the property itself or the construction. Again, just going through your natural person over the age of 18. The key things as well is you obviously can't have applied previously for the first homeowners grant or the first homeowners duty. You can't have owned a residential property anywhere in Australia before those dates. And one of the key eligible requirements is there that the total value of the home must not exceed $750,000 if you're located south of the 26th parallel. So the grant's really there for first homeowners who are buying a new constructed property or constructing itself. In regards to for the first homeowners rate, so this is in regards to concession on stamp duty. So it's for people who qualify for the first homeowners grant in respect to acquiring a new property. So when we say qualify for the first homeowners grant, it's your first property and it's within the parameters. So you can actually, if you're buying a property, you can then you're not eligible for the first homeowners grant, but you can be eligible for a reduction in the stamp duty. So when you do buy a property, your stamp duty is payable on the transfer of land or payable on the property. Under this scheme, if the home does not exceed $430,000, then there's no duty payable. So even though you don't get the first homeowners grant of $10,000, which is only applicable to construction or buying a newly constructed house, you do get the benefit of a reduction in the stamp duty. So on a property of $430,000, it's an approximate savings of $14,000 in stamp duty. So purchasing vacant land, you can actually apply for a reduction in the stamp duty, but you do have to build on that property. There's some nuances in this in regards to you have to pay for the stamp duty up front. And then once you have your building contract in place, then you can apply through the Office of State Revenue to get the reimbursement on the stamp duty for the transfer of land. On a vacant land that's at $300,000, that could represent a savings of $8,800. So there's a lot of different qualifications and clarifications into different grants. So one of the main things here is just to be proactive in regards to talking to your finance broker, to myself, to understand the course of events in regards to what's payable up front and what are you entitled to as a first homeowner. Now we move on to the home building grant, which is the federal grant. So we'll go through that, and that's a federal grant of $25,000. It provides eligible, it's only for owner occupiers. So it's not available for investment. It's including first homers with a grant to build a new home or substantially renovate an existing home. So as I mentioned, it's only there for owner occupiers, not for investment. This complements any existing state grants. So this is in regard, complements if you're eligible for the first homeowner grant of 10,000, and then also, as we'll discuss further, the state grant of 20,000. The criteria is very similar to the first homeowners grant there. However, this is actually, there's an income ratio, an income test in regards to the qualifying for the 25,000 grant. Those criteria are there. So 125,000 per annum for individual based on your 18-19 taxable income, or 200,000 per annum for a couple based on your 2018, 2019. So your income must be below those caps. You do have to enter into building contract. So this scheme was released on the grant was released on the 4th of June. You must enter into building contract between those dates up to the 31st December. To either build a new home as, again, your principal place of residence, not for investment, where the property value does not exceed 750,000, or you renovate your existing principal place of residence, again, where the contract value of that renovation is 150,000 to 750,000. But the additional clause for renovation states that the property cannot exceed 1.5 million after renovation. So it's a little bit about the homeowners grant. Construction must commence on or before, or on or after the 4th of June and within 3 months of the contract. Now, that's could cause, if there's some delays within that 3-month period, that you can apply for an extension if those delays are caused by council with approval of plans or the building costs, building contracts. You can apply for an extension, because that was one of the main concerns within the industry with a home builder grant, and also the state grant that we're going to discuss a little bit. I'll discuss a bit further. Is that tight time frame to have construction to commence within 3 months. So as an industry, the body, that now has been a decision made that we can seek approval to extend that 3-month term. You can purchase off the plan apartment properties are eligible. However, owner builders and investment properties, as mentioned before, are ineligible for the home builder grant. Building contract must be at arm's length, which basically means that the contract must be freely made between two parties who are independent of each other. And in most cases, that will be the case where you'll have, say, a Dale Orcott building the home and yourself, so it will be arm's length. And of course, the building and renovations must be undertaken by a registered or licensed builder. So they're just some of the other conditions in regards to the home builder grant. Again, that's the federal grant. Moving on to the building bonus, which is a state grant. So the building bonus, it's a little bit less restrictive in terms of cap, etc. The grants available, this is the state government, it's really to promote investment in the WA residential market. So it's eligible for any clients who enter into contract to build a new home on vacant land. You're able to enter into an off-the-plan contract to purchase a new home as well. Same conditions previously as the federal building, the other federal building grant. The contract must be entered into up until the 31st of December. Now, there's no cap on the purchase price or value of the contract. There's no income parameters as per the federal. Can be for owner occupied or investment. So it's quite liberal in that regard. It's for building, and some of the restrictions for the building, it's got to be a detached house, cannot be for mixed use, for commercial property or short-term accommodation. Can't have shared walls. The land must be vacant. So in that regards, if you buy an existing property and you demolish the property, the land must be vacant, and you can apply for the building bonus if you meet the parameters in regards to signing the contract. And again, construction must commence within 6 months of entering into the contract. So it's a little bit different there in that regard. Off the plan contract purchases, are eligible, must be part of a single tier development, cannot be for a completed dwelling that is already held by the developer or any other person. So it's really there for if your developer is selling the property off plan and it's due to be constructed in due course. Unfortunately, the building bonus does not apply for high-rise apartments. However, there's other avenues there where you can receive a rebate on the duty paid as well. So it's another avenue to assist with the purchase. And again, construction must commence within 6 months of entering into the contract. So that's the state building bonus. Some of the finance requirements, which is this where my role as a broker really comes into it. As we've gone through the three grants, there's a lot of little nuances, a lot of conditions, and understanding what does or does not apply to yourself as a first homeowner looking at either buying a property or building. So my last point there, to be proactive and seek guidance, it probably should be the first point to understand what your borrowing capacity is, understand what your grants you're available for. That should be your first protocol, is be proactive, seek guidance from myself or your broker that you use to really understand what your requirements are. There's a lot of emotion out there at the moment. It's a bit like the toilet paper saga when COVID came out, everyone was out there buying the toilet paper and it all worked its way through over the period of time. A lot of emotion where clients are going out there buying properties or putting offers on land, not really understanding whether they can seek the finance, what their minimum deposit is and what they're entitled to as well. So really just to take that emotion out of it and be proactive and get an understanding up front, puts you in a good stead, a good footing to look at what property you can purchase and what amount you can actually go up to. One of the things with the banks is they will not include the home builder grant or the building bonus, or the 20 or the 25,000 as part of your equity or your deposit. Most of the lenders out there will need a minimum deposit of 5% for genuine savings, so that you've saved that amount over a period of time, plus associated settlement, stamp duty fees, etc. So the banks won't include the home building grant or the building bonus as part of your equity deposits. Those grants will be paid when slab is down, which is basically after all your finance has been approved. The first homeowner grant, however, will be taken into consideration, so we can build that into your overall deposit that you have in the transaction. What else are the banks looking for? Stable employment, obviously through this COVID time. They're looking at stable employment. And with the stable employment, you have sufficient income to meet all the pending loan commitment, any other loans that you do have, and also living expenses. So the banks now look at quite stringently around living expenses. If you're a couple that have been living at home and then you're moving into your first property, they'll look at your living expenses going forward. So what your groceries are going to be like, allocation of rates and maintenance around for the property. They'll look at education, not so much education, clothing, entertainment expenses, and make sure that the income is sufficient to meet the loan repayments and living expenses. There's a index called HEMS, which basically confirms how much a young couple or an individual basically needs for living expenses across the board. But that's where my role as a finance broker is to really do a full fact find, understand your financial position, look at the different ways that we can structure the debt, provide alternatives that best suits your needs. So I can present all the options, having access to many of the banks and the financiers. I can provide with all different options in regards to who the finance provider is that suits your needs. And then yourself as a consumer can make that decision which bank you want to choose. And then we can go forward with the application and completing the transaction. But just to summarize, before I hand over to Stephen, the homeowner grants, the building grants, and the first homeowners grant, there's 3 different grants there. There's a lot of different criteria and nuances in regards to what you can, what grants are applicable to each certain circumstances, when they will be paid, how they could be included in your finances. So again, I'll come back to the message: be proactive and seek guidance. Have a discussion with myself in regards to what the possibilities of structuring the debt, possibilities of borrowing for the purchase of the land and the construction. Bearing in mind with construction as well, you also need to be mindful of having funds available to complete the property, carpets, curtains, landscaping, etc. So just to factor in and building the whole scenario. So that really covers off on the first homeowners grant, the home builders grant. Hopefully that's provided you with a little bit of background in regards to the 3 facets. As I said, there's a lot of information there. I'd be more than happy to speak to yourselves individually, and if you've got any scenarios on the currently, or you're looking at buying a new property and entering into the market for the first time. So I thank you for your time. I'll now hand over to Stephen.
Thank you very much, Eric. Sorry, Dinesh.
No, please go ahead. Thanks, Eric. Steve, over to you.
Thanks very much, Eric. So with a lot of these schemes that the government has introduced to ameliorate the effects of Corona, they're great in theory, and they're going to be good for many people. But as always, the devil is in the detail. And people who are intending to buy a vacant block of land and then build, in many cases, you're going to want to do that only if you're sure that you're going to get at least the home builder grant, and possibly one or more of the other grants. And there can be some challenges in doing that, just because of the very nature of the market for vacant land and the market for home building services. So if you're buying vacant land to build, the settlement date is almost certainly not going to be guaranteed in the contract, unless it's a development where they've already got titles issued. But as people may know, in many cases, they start selling lots when they've just got a big broad acre piece of land and they haven't even done the engineering works yet, etc. So in many cases, they will not, they will have an end date, and they say, well, you can get out of this contract if we haven't got new titles by 2022 or some such. But that's not really going to help you if you need to qualify for any of these grants. So while you must apply before the 31st of December, settlement can occur after 31st of December, but you must sign a building contract before 31st of December, and building must start under the contract within 3 months. So effectively, as a very theoretical end date, settlement can't occur after 31 March 2021. That's the theoretical end date, because having said that, I don't think you could get settlement and then have on the 30th of March and then have your builder start work the next within 3 months. So, well, it's got to be, so within by the 31st of March. So if you'd signed your building contract on or before 31 December, the last date the builder could start, unless you get an extension, is 31 March. So if you're only settling in probably March or even possibly February, your builder may not be able to start in time. So you need to check with your builder when we sign a contract, how long, and how long do you need builder to start between the date of settlement of the land, given the various steps that the builder must go through. And often they won't necessarily go and apply for planning or building approval until you've got settlement, because they don't know that you're actually going to get the land within the right time frame, or they may do all that work and you get a fee for it, which you'll end up paying even if your land doesn't settle in time and you can't qualify for the grant. So what you would think you could do is, if you're signing a contract and you can only get money from the government if the contract settles within a certain time, you would think, well, let's just put a condition in the contract to say, okay, this contract doesn't settle, if the titles aren't issued and settlement doesn't occur before, say, the end of January 2021, then unless it's my fault as the buyer, then I can terminate this contract. Unfortunately, the way the market is, we don't think that any vacant land sellers are going to give you those sort of conditions. I mean, firstly, a lot of the vacant land in broadacre subdivisions are obviously done by big corporates, and they tend to have standard terms and conditions and they don't like changes. Maybe in a really quiet market, you might be able to, and they were offering a lot of incentives in earlier days to get people to buy, like, you know, fencing allowance, and various different cash rebates and other incentives. However, what we're hearing is that all these incentives have actually dried up now. And in fact, that the price of vacant land has gone up somewhat to soak up all this extra demand and extra cash that's out there. So they're all, the big subdividers are almost certainly not going to give you any condition in the contract that will give you comfort that you'll actually be able to settle in time to qualify for these grants. So you are taking a bit of a risk, and you obviously want to try and find one where the titles are already issued, or they can give you an assurance that they're about to issue. And often they will be very reluctant unless the titles are actually issued, or there's almost no conceivable reason why they won't issue next Tuesday. Then they're not going to give you any assurance, and any assurance will only be verbal, and the contract will expressly state we have not guaranteed when settlement will occur. As mentioned by Eric, if you sign your building contract and it doesn't start within 3 months, you can apply to your own, even though it's federal money, the state taxation department is administering the scheme. You'd apply to State Revenue WA for an extension, and you'd have to have a good reason, and that would be unforeseen delay. So an unforeseen delay in something like planning or building approval. Now, if you haven't allowed enough time to get those approvals, that wouldn't be an unforeseen delay, because if the builder tells you it normally takes a month to get planning or a building approval, and you've only, your settlement occurred on the 31st of, or say the last day in February, only leaving March to do that, then, and you don't get your building or planning approval in March so that they can start by 31 March, then the government may well say, well, that was foreseeable because you knew you didn't have a locked-in settlement date, and you knew settlement could have occurred as late as March, and so you weren't allowing enough time to apply for approval. So you need to sort of sit down before you sign your vacant land contract with your builder and go through some of those issues and see how much comfort they can give you. So that's next slide, please. So vacant land, and if the settlement date's variable, it doesn't occur until after February 28th, and the builder normally takes 2 months to get approval, well, you're not going to get an extension from the government, so you won't get your $25,000 building home builder grant. The state money for home building, you've got 6 months, and we haven't heard yet whether they're granting any extensions if you can't build within 6 months. As people may well know, project builders will almost certainly not guarantee a start date within their contracts. They have so much work at the moment. They're able to turn down work if people are asking for conditions. Again, being big companies, they don't often agree to changes to their standard terms and conditions in any case, particularly not in a strong market where there'll be lots of people who'll be happy to just sign their standard contract and take the risk. And in fact, they're even inserting clauses to say, if we don't start in time and you miss out on the money from the government, we've got no liability to you. If it's a smaller builder who maybe doesn't have as much work, they might be prepared to negotiate their terms and conditions to give you an out if they're not able to start within the time that would qualify you for the grant. You can apply for the home builder grant in relation to vacant land that you owned before the 4th of June, but the total value of the land plus the build must not exceed $750,000, and you can't have already signed a building contract before 4 June. That's bad luck. This was as an incentive to people to sign new building contracts to stimulate economic activity. The government doesn't see any benefit in paying people money if they'd already financially committed to a building contract on or before 4 June. As you know, the home builder is also available for renovations, provided they cost at least $150,000 and subject to those other conditions Eric mentioned. Standalone granny flats are not counted as a renovation, nor is a swimming pool. However, if you wish to take advantage of renovation to provide accommodation for, say, elderly parents, one option would be to do a renovation which consisted of adding a new wing to your home. as long as that exceeds the minimum value threshold. Next slide. Now, the home builder also applies to off-the-plan purchase contracts. So that's where there's a new development and you're going to mainly buy a unit, often yet to be built. And the conditions around these are quite restrictive, which is in practice means that not a lot of people may necessarily qualify for home builder for an off-the-plan unit purchase. Firstly, construction must not have started before the 4th of June. Now, you should be able to get the developer to at least guarantee whether or not construction has already started before the 4th of June. But it must also start within 3 months of contract signing. And that's going to be a tough one because they almost will not never guarantee any particular start date for construction or anything. So don't sign unless they're going to give you a rock solid guarantee. Basically, the construction will start. And there may be some projects where they have got all their approvals and got their finance and they are about to start construction and can give that guarantee. But a lot of these projects, obviously, they sell contracts quite a long time before they've even got all their finance approvals and development approvals in place. Once they've sold enough contracts off the plan, they then go and apply for those things. And then they've got the right to cancel if they don't get their approvals. So developers are unlikely to guarantee that construction will start within 3 months. This takes us to land contracting issues in general. There's some significant issues with this when you're a buyer with the standard contract for the purchase of land or a house, and these become a little bit more important in this particular context. The subject to finance clause in particular, in practice, we don't find a lot of people getting caught by this, but there are a lot of pitfalls which could go wrong and sometimes do go wrong. Firstly, there's a box in the subject to finance to pick a named lender. You don't have to fill that in, and it's a good idea not to, because that means you have to make an application to that lender. And when you see your broker, they might advise you to apply to another lender, and that's fine if you get finance with that other lender. But if that other lender rejects you and you want to get out of the contract, you can't, because the contract said you had to apply to lender X and you applied to lender Y. So there have been cases where people have lost their deposit because they applied to the wrong lender and did not get finance. So leave it blank, and then you're free to apply to whichever lender you want. The contract also says you must apply for finance immediately. And while that doesn't mean, within the same instant as you sign the contract, it will be interpreted fairly strictly. So really, if you're not ready to apply for finance within the next business day or so after you've signed your contract, you're theoretically in breach of that clause. And if you don't get finance and you could have possibly got it if you'd applied when you were supposed to, and you need to get out of the contract, you may not be able to. So it pays probably to speak to Eric before you even go and sign your land purchase contract to see, maybe even start the finance application process, or ask him if it's a situation where you can even get a pre-approval, because that way you will, you've got your ducks lined up to submit your finance application fairly promptly. Now, you may not have all the information, but as long as you submit a reasonably plausible application, and that's okay, you can submit further details as requested by your lender later. Finance clause is not a free option for you to just lock in a deal and then look around for a better one and then use the finance clause to get out of the first contract if you find a better deal, or if the deal doesn't work out because you can't sign a building contract that's going to guarantee that you'll get the home builder. So you're required to actively pursue your finance application as if you really passionately wanted that property. And if you don't, the seller, it comes to a dispute, you can lose your deposit, and the seller will just keep your deposit, and it'll be effectively up to you to prove that you did apply and pursue the application in good faith, and the seller can see all of your emails, so you don't send an email to your broker saying, well, we're going to fail this finance application because we want to go and buy a different property. If you're going to have that discussion, have it off the record in verbally. Now, as I said, land sellers are unlikely to agree to any of your special conditions that you request, like settlement must occur within so many months. If it's not a major developer, it might be a smaller person who's just subdividing their backyard and selling off a vacant block. But having said that, as far as we can tell, there's reasonably high demand for those lots as well. So in fact, they may even be more demand because they're can be in more sought after areas than in a new broadacre subdivision. So again, those sellers may not be agreeing to insert special conditions either. Also, when you're buying vacant land, particularly in a broadacre subdivision, read the restrictive covenant, which will be attached to the contract before you sign it. There's often a brochure that explains it, but that will say things like you must build a house of a certain quality, possibly of a certain value or a certain floor area within a certain size. There's only certain finishes you can use or not use, certain fencing standards, etc. So just ensure that the rules about what you can and when you have to build and how much you must spend, etc., are all consistent with your plans and what you can actually sign a building contract for. So that's it for any legal issues. If clients are using, we provide settlements at a fee which is very competitive with settlement agents. If someone's using us for the settlement, we're happy to give them a free set of any special conditions which they may wish to try to get included in their purchase contract. But as I said, there may be some challenges with that for vacant land in this particular market. Buying an existing home, however, well, those sellers might even be sort of more eager to try and attract buyers, given that there's not a lot of money being poured into that market by the government. So you've got a bit more freedom to contract if you happen to be buying an existing home at this time, which is not heavily loaded up with government financial assistance. So as I said, if you are using us for settlement, you come to see us first. We can give you free general advice and special conditions which will improve your situation as a buyer under land or home purchase contracts. So thank you.
Thank you, Steve, and excellent insight into how you can get into the traps of the contract. So we got some questions already coming in, and anyone else who's got more questions, please feel free to put it in the chat box or in the Q&A. So I'll start with some of the questions I have here. First, probably relevant to you, Eric. Some builders advertise that people with steady income can build with a minimum deposit of $2,000 only, nothing else is required. What does it really mean, or is it just a fake advert?
Good question. I don't think it's a fake advert. I mean, they wouldn't be actively publishing something that they could not achieve. There's different lenders, different financiers have different requirements in terms of deposits. There's Keystart out there as well that have a minimum deposit requirement. The best option is to have a chat. If you're in that case and it's only $2,000 deposit, have a chat to them, but definitely understand all the terms and conditions in regards to what the finance offer is or what the restriction and conditions are out there. As I mentioned earlier, most of the financiers, the banks, the second tier banks, as a minimum will require 5% deposit plus fees. So what it does is it brings your loan to value ratio, so you can then borrow up to 95% of the value of the property. But there's also lender's mortgage insurance as a fee involved in there. So effectively, once you build into the lender's mortgage insurance, it does change your deposits or how much you need. So again, if you do, explore your avenues, but please make sure you understand those type of offers out there. It's a bit like when you go buy a new car and it says 0% finance. It's almost too good to be true, but it's just understanding what's the full finance requirements and conditions. My role as a finance broker, I've got access to different lenders with different options, and we can work through those if need to be. But yeah, just make sure you do your homework on those and understand the full terms and conditions.
Okay, thank you, Eric. Another question is, has the construction, the other question is the purchase. As a purchaser, I have been asked to get a bank pre-approval loan. So how do I go about this, as it is apparently only last 3 months?
Okay, in the market at the moment, there's a couple of I've been requested to provide some letters in regards to just an indicative, can the client afford the ability to borrow, which is really not worth the paper it's written on, but it basically just says, as a one pager, as a broker, I've done some initial investigation, some initial homework that says, yes, the client's provided all the information, the evidence of all the income I received, the clients can borrow up to X amount for the purchase of the property or construction and so forth. We can look at getting pre-approvals with different banks, but that will, any pre-approval will involve a full application. So I go through a full fact find of your full financial position. We'll get copies of all your pay slips, etc. And we'll lodge a formal application with a bank to get a pre-approval. So yeah, there's two facets in the market at the moment. One where some of the buying land and house packages or buying agents have just want like a real pre-vetting letter. As I said, it's not approval. It's not an approval. It's not an indication. It's just a rough estimate of, yes, they can afford or they can borrow up to X amount. Or the second option is we go through a full pre-approval and actually lodge an application with the bank.
So it can give you a lot of confidence before you go out in the market and sign the contract. So, and it also cuts down on your finance application time process once the contract is signed. Thanks, Eric. Steve, I think the next question may be relevant to you. Has construction commenced if the site work commenced before 4th of June, but no building work or the slab has started yet?
That's a good and interesting question, the person. Thank you. We don't know yet because we're only dealing with government press releases in which they've given high-level details of the scheme. They haven't even introduced the legislation into Parliament yet. Obviously, they will have a definition of what construction is, and this is also relevant for people who need to meet that 3-month time within which construction should start. So we're going to watch that with keen interest, and we will put information on our websites, and we can email anyone who's interested. If you email us and say, please let us know once we get more details, we can keep you on a mailing list to update you about that. So at the moment, though, the problem with that scenario is going to be not so much whether construction has commenced or not, but almost certainly if any work has been done before 4 June, there's going to have been a building contract signed before 4 June, and that's what's going to stop you being eligible.
Yes. So what do you actually mean by the start work by 31st March? Is it the slab down, the main criteria, or the start of surveying the site, or earthwork? Yeah. Or
that's the $64,000 question. The question which was in that viewer's question that we're just looking at. We haven't. Obviously, they're going to have to define what construction start means, and they may even have, because there could be a situation where builders come up with a scheme where they just sort of do some token work and then delay for 6 more months and say, oh, we've started because we dug a hole. So I think the government is going to define it as some sort of substantial work needs to have been done. But yeah, we're not sure what they haven't indicated what it will be at this stage.
Thanks, Steve. Eric, question for you. Can I go through Keystart to begin to make use of the lower deposit scheme? And once the building is finished and the grants have come in, can I refinance?
Great question. We were only just talking about that very scenario in the office this morning. But the answer is I can't see any reason why not. The Keystart will facilitate that small deposit up front. And once you get the grants in, yes, then we can then look at reassessing the application after that. So yes, the only issue I'm not familiar with is Keystart, if there's any break costs or anything like that. Keystarts, I believe, are possibly a higher rate over the period of time. The banks, you would have to, I would believe, complete the dwelling, complete the property, and once it's completed, then look at refinancing once you've got that 20,000, 25,000 grant. Most of the banks won't take on a construction halfway through the process. So the question is there, if you need to go down Keystart, pay slightly higher interest rate over that period of time until you get the grants in and then reassess it? Yes, we can look at that. I can't see any reason why not. Subject to
Thanks,
usual
Eric.
bank criteria.
Steve, a question is the Home Builders Grant text?
No, it's not.
Okay, thank you. The other question is, my partner and I jointly own our home. I am an Australian citizen, but my partner is not. Can I apply even though the home is jointly owned?
Just, yeah, Eric here, in one goes those eligibility, I'm pretty sure as long as one of the applicants is an Australian citizen, that they are entitled, but that will be something just to reconfirm those eligibility criteria. But
yeah, but my understanding, I think, Steve, unless you have a different view, that if only one of the partners is an Australian citizen, they will have to title the land only in that person's name, because if there is a joint ownership or a tenants in common, and one of them is not an Australian citizen, there will be a problem in getting the grant. Now, there is no clarity, I suppose, unless the legislation comes up with that, whether you will get a proportionate grant or half grant or not. But at this stage, it appears that if you want to be absolutely sure, then try to title it only in the name of the person who's an Australian citizen.
Yes, it does say clearly in the FAQ on the government website about home builder that if two people are listed on the certificate of title, they must both apply for home builder as a couple, and they must both meet the eligibility criteria, and therefore they must both be citizens. So if one of you isn't, then the property, as you say, Dinesh, needs to be bought only in the name of the citizen. Having said that, their partner's income will still be taken. I believe their partner's income will still be taken into account, though.
Yeah, which Eric comes to the next question. Eric, if the land is or the property is titled only in one partner's name in a couple, I suppose they can still use the joint income to service that. In that instance, would the other person who's not on the title will have to just guarantee or be a guarantor to the loan to consider their servicing income as part of the application?
Yes, that's an interesting, very interesting question, because you open up a can of worms in regards to the National Consumer Credit Code, that what benefit is the person guaranteeing the loan if they don't have an ownership in the property. So that's where we'll have to dive deeper into each particular bank's policies, how they would treat a guarantor or a party who's not party of the loan or the ownership of the property guaranteeing that debt. So again, each bank has different particular policies around that.
Okay.
You'd have to go individually work through the different scenarios with the banks.
Okay. Steve, maybe you would like to answer this. What if I want to buy a recently built home that has never been lived in before? Which could be relevant to the 4th of June date. So if the house has been recently built now, then I suppose it will have the same clash. If it has been built before 4th of June or after 4th of June, the construction would have started before 4th of June. That will not stand eligible, Steve?
Yes, because you yourself need to sign a contract to get home builder. You yourself need to sign a contract to get that home built on or after 4th of June. So if it's already been built, then by definition, you didn't sign that contract before after that date.
So if a developer builds or subdivides, build few blocks, but the final units or the houses are not titled, till after 4th of June. And if they sell that in the market, it's the same issue. The buyer will not be able to get the grant, even though the titles have been issued after 4th of June for those apartments, because the construction contract was not signed by the buyer.
Correct. So the only way that you can take advantage if you're not signing the construction contract yourself is if you're buying a finished product off the plan. So you're signing a contract now and they're going to deliver you a new unit. But the trouble with those is that, as mentioned, the construction of the units themselves, even though it's not by a building contract signed by you, even though it's the developer doing it, they must not have started construction before 4 June, and then they must start within 3 months after 4 June. So yes, if it's already been, I mean, if they, and it's not possible really that someone could have started after 4 June and already finished, so that won't, they won't be buying any existing properties that have already been developed under this scheme.
Thank you, Steve. Do you have any idea on when the bill is actually expected to pass in Parliament and go through the Royal Assent?
No, but if you send in your details, whoever asked that question, by email, we will undertake to find out and email you back as soon as possible, and we can update any other participants.
And what happens if the bill is debated in the Parliament and there are some objections to some criteria of the bill, and a lot of buyers in the market have already signed and locked in the contracts?
Yes, so you would think that the government may have got some sort of assurance from the opposition that it was supporting this in principle, or even if it didn't, often the opposition feels like they did with JobKeeper, they feel a moral responsibility, even though they may not agree with everything, to just approve it simply because of that reason, and because they believe it's something, and while they've got a better idea, they're happy to support whatever the government is doing. So I'm not expecting that to arise, but theoretically, yes, you could act based on a press release before legislation is passed, and theoretically that legislation may not ever get passed, so you might have taken a risk on something that turns out not to exist. It's pretty unlikely politically.
Yeah, but the way the federal government keeps fiddling with its own announced schemes and even with the legislation by releasing different media statements, it can be a little bit scary and create doubts in the minds of the people.
Yeah, I mean, what you hope the government does in those cases is when they change things by press release, you hope they're only either making it more eligible because someone's pointed out a weakness about a way that it might not really benefit that many people, or there's a genuine grey area and they're just issuing clarification. They tend to for political reasons, not take away by press release something clear that they have mentioned, so that you at least have that comfort.
Thank you. There's another question which I'm not 100% sure, but if purchasing an investment apartment, are you eligible for 75% stamp duty reduction? I'm not sure who would be the best to answer that. Steve?
I might be able to take that, Dinesh. Eric here. Yeah, as I mentioned earlier, if it's a high-rise apartment, then the home builders grants don't apply. But you can apply for up to, I think it is 75% rebate on the stamp duty up to 50,000. So there is incentive there to buy an apartment in a high-rise building with a reduction of stamp duty.
And that's again for the first home, under the first home owners grant or under the home builders?
It's a separate grant altogether. It's in regards to the stamp duty purely.
Oh, okay. And even though it's an investment property, doesn't matter which because it's asked for, the question says investment apartment.
That's a good question. That's something I need to clarify whether it's investment or not. Not 100% sure on that, sorry. There's so many different nuances with so many different grants. That's one I would not like to commit, but I can follow it up if you like.
All right. We don't have okay, well, we can answer that question by email if we can get the question from the attendee. Now we're running out of time. Probably one more question is that what renovations are eligible? I know it's been touched a little bit by Eric and Steve as well. If any one of you would like to have some final comments on the type of renovations and any conditions around that.
Steve, you covered off. I think you said the granny flats, swimming pools. It can't be for any commercial purpose, mixed purpose. Must be no common walls. It's really just renovations to your primary principal place of residence for the federal government. The state government one is for your own residence. The state government doesn't have as many restrictions. It's really the federal government grant that has those restrictions as well. Is that your take on it, Stephen?
That is pretty much the same as my view on it. Yes, Eric.
Okay, so I think that brings to the end of it. I'll just see if I have. All right, I think we're running out of time, so that brings to the end of it. So thank you everyone for attending this webinar, and we'd like to thank our panelists for contributing their time, for providing their views and giving more information. So thanks everyone once again. Have a good day, and please stay tuned for some other webinars which will be coming soon. This webinar has been recorded, and we will send the recording to the attendees in the next few days when it's ready, and that will also be released on our resources page on the website. So thank you once again, and see you again soon. Thanks. Bye.
Thanks, Dinesh. Thanks, Stephen. Thanks everyone.
Gentlemen, thank you, everyone.